give us an overview on what, if we talk about foreign investors, on what sentiment is like when it comes to their, sort of what their sentiment is like towards Nigeria at the moment? Are they very bearish about the country, or do you still see a lot of interest from foreign investors to put their money here?
Foreign investors currently are very bearish on Nigeria, which we all know that. But when you think about it, let's look at a foreign investor, what you're looking for. The reason you will come into Nigeria is to get yields, which is what the central bank governor seems to be focusing on. But yields alone doesn't stand alone by itself. So if I bring my dollars into Nigeria currently, and I'm not so sure about what exchange rate I will take the dollar back out, that means I can calculate how much yield I can get from my investments. So I bring money in today, I change it at 315 or 320 or 325 or 330. For example, about the uncertainty around the FX. On Friday last week, NIFX closed at 331 or 339, I believe. Bloomberg was 315 on the dollar. FMDQ was 317. Parallel markets was 404. So if I'm a foreign investor, how would I bring my money into a market where I don't even know what exchange rate I'm supposed to follow? So until we fix the exchange rate issue, we can't expect foreign portfolio investors to come into the market. That's portfolio side. When we look at the foreign direct investment side, FDIs can still come in because they have a longer term focus on what they're trying to do. However, if you're not so sure how much you will change your money, or if the government is even focused on moving things forward, you still wait and see as opposed to coming in. You start discussing, you look at things because assets are cheaper now because of the foreign exchange devaluation. However, you won't bring your money until you have certainty that, okay, the government has turned the corner and we can see growth eventually. Because at the end of the day, I don't want to bring my money into a country where my money will be diminishing as opposed to growing. Now, if you look at our market, the stock exchange, traditionally we have about 50-50. Foreign investors are 50%, domestic investors, local investors are 50%. Now, if 50% of our market is not coming in, it's difficult for the market to move forward. 50% is coming in ordinarily will be the one buying and selling and generating the flows and the volumes in the market. And if that doesn't get generated, even the local investors, which the largest part of it is the pension funds, will not participate in the market. So that's an issue that we need to fix, and it's all tying back to foreign exchange. Now, there's another issue that we need to focus on the market, the Nigerian market. If we think back into 2008, 2009, when the oil prices went down, what happened to the market, to the banks? We had 9 to 10 banks fail, almost. The same issue can be seen now. So if I'm a foreign investor that's doing analysis, I look at the banks and say, okay, these banks are supposedly strong, making money, they've been cleaned up in 2009, 10. However, the same macro fundamentals that happened in 2009, 8 is happening now. What am I not seeing? And you know, back in 2008, the banks were fine. Everybody was fine. Everybody was declaring profit, despite the fact that they're not really profitable, until the central bank issued a special analysis, special examination, until they found that 10 banks were failing. When you think about the size of the oil and gas market in 2008, it was about 1.6 trillion of the banking sector assets. Now the exposure is about 3.6 to 4 trillion, the oil and gas exposure of the banking. So if I'm a foreign investor, which by the way, the market in Nigeria is about 60-70% financial services. So if I'm a foreign investor, why would I come into the market and buy even financial services banks at the current valuation they are? Because I'm not sure if their assets is right or wrong. Some banks have 50% foreign loans on their books, and out of their 50%, more than 50% is probably bad. Some banks, instead of qualifying the loans on their books, they're putting it in watch list. How long can you keep loans in watch list before you actually go and turn them into NPLs? So the issue that we're seeing and what we're hearing from foreign investors is that we can't come in until we see clarity and know that the government is going in the right direction. Another issue that we have with the FX is we have a backlog still. I know they tried to clear the backlog in June, but I'm not sure they cleared all the backlog. What we think is we still have about between 2 to $4 billion of backlog that still need to be cleared. And until the government goes out to actually clear that, it's difficult for us to see a nice, transparent FX regime. And if we don't see that, then it's difficult for us to move forward.
Ogo, are we any closer to seeing the end of the FX scarcity in Nigeria? Has the devaluation in June of the Naira made much difference?
I don't know how, because if you look at, all the sources of foreign exchange in Nigeria, and let's talk about them one by one. One is the oil revenue. That's the one that everyone pretty much knows about. And it's already, we don't see, the outlook for that is very, very poor as long as the oil prices remain as it is. That's one. And we have the problems in the Niger Delta. So those are the two problems on that front. The second one is remittances. Remittances are largely through informal flows. I know that the CBN is now trying to formalize everything in order to bring them to the central port, but largely at the moment it's still an informal flows. That's the second one. The third one is the FDI. We have a situation where it's basically wait and see. And the fourth one is the portfolio flows, which he has just explained. So if you actually look at the supply of dollars into the economy, it's very, very difficult to to believe that the situation is going to improve anytime soon. And I understand when people talk about foreign exchange shortage, but this is a national problem. It is not a sectoral problem. It is not an individual problem. It is a national problem. We have been in this situation for 30, 40 years. Nothing has been done. Nobody can convince me that sufficient methods have been put in place to address this problem whenever it arises. If you look at the growth that we had in the 70s, it was because of oil prices. When the oil prices fell in the 80s and the 90s, we had 2 lost decades. When after the century oil prices improved, we had growth. So now we do not have the oil price, on our side. Now we have this growth situation. So if you actually look at all these issues, they are not short-term problems, they have long-term problems. And if they are long-term problems, we can either choose to say, look, which are the sectors that have 2 important features? Do they produce tradable goods? And are their productivity comparable to international markets? Those are the sectors that we should look at in order to get the foreign exchange. But if we are looking at the oil sector, we can only pray that situation improves and oil price improves. The dollar situation is not going to improve. I think anybody that thinks all of a sudden we're going to have additional dollars and there will be stability in the forex market, it's not going to happen. The CBA does not produce dollars. The last time I checked. So if we say, okay, look, these are the reasons why investments are not coming because of the forex, we can all sit down here and look at the people here and say, oh, because I don't have dollars, I can't do this. It's not coming, and it's not going to come anytime soon.
I think the devaluation should definitely have happened at an earlier stage, and a lot of time wasted and money spent by delaying it as long as possible. So, I think the CBN last year, I did cover this in some of my articles. I think the CBN has to go put aside this sort of way of thinking where they try to direct where the banks lend to, what sectors of the economy they lend to. This is a method of thinking that was used in the Soviet Union and the Eastern Bloc in the 70s, 80s, and 90s, and did not work particularly well, and there's no reason to believe that it will work better in Nigeria. It clearly hasn't in the last year, so I think it has to focus more on letting the market determine the exchange rate, and also what sectors to lend to. It has done some work in the agricultural sector under the previous administration with Goodluck Jonathan and Adesina as as agricultural minister that might be worth continuing, but I mean, I think everyone in the banking sector would like to lend to the agricultural sector if the returns were commensurate to the risks, but I think everyone knows that that is very seldomly the case. But I think they did some interesting work in looking at the whole supply chain in the agricultural sector, because what you often have is, you lend money to the farmer, but then there's someone, a middleman, who basically reaps all the profit, and the farmer's just stuck with the debt and hasn't really made enough money to repay that. So that's some of the things I think the CBN should be looking at.